All right, we are live. Prospero.Ai stock market live stream. Welcome back, everybody, to today's live stream. We have some great topics, a lot going on in the market, a little bit of a sell off throughout the day today after Monday's gap down and recovery throughout the day, recovery Tuesday. Good open this morning. Seems like we're finally giving some back. Maybe the market's not ready to commit to the bull story, and there's still some bears left out there. But before I get into the topic list that we're going to go through today, thank you for everyone for the support on Monday's stream. We crossed 15 likes and over 1,500 total viewers between YouTube and Twitter or X. And as always, for everybody who can't catch these streams live or wants to listen to them on another platform, in the description on YouTube, it links you to our Spotify page where we post them later the same day, so you guys can check that out as well. But without further ado, if you caught Monday's live stream, you were probably happy that SMCI was brought up towards the end of our stream and we covered their earnings. And we saw some bearish signals inside of the Prospero app, which made us reduce our positions. And we saw SMCI reported earnings and the market was not happy with the results. Although I must say, I was watching it live and initially it went up, I don't know how much, I think like 10%. And then what a swing in the market, and it is down now. Let's get a live look at how SMCI is looking at this point of the day. SMCI it just crossed under 500. It's down 19% on the day. So we'll cover that in detail and how the Prospero signals were able to sniff out that poor earnings result. Next, we have a stat from JP Morgan, which is pretty shocking, of the transfer of money between retail investors and institutional investors on Monday. Probably the most panic we've seen in the markets in a while. We covered how the VIX hit 68, which was the third highest since the global financial crisis and the COVID crash. So a lot of negative was priced in the markets, and it seems like institutions bought it while retail sold. I'll tell you the amounts when we cover that. Next, we have a stock that we cover a lot on this channel. Disney had earnings, and we've criticized them before for their Disney Plus spending a lot of cash building out that platform. They just turned a profit for the first time. So when we discuss about this topic, we have to ask, why is the stock down today? I thought everybody cared about streaming. We'll tell you why and what's weighing on the stock. Next, we have a story about Robinhood and Schwab. So with the high level of volatility we've seen in the markets, it seems like these brokerage platforms are having some problems. If you use Robinhood, you've probably seen that their 24-hour markets have been down the past 2 days. A lot of people had troubles logging into their Schwab accounts on Monday. So are we going to see this going forward, especially if volatility remains high and on these very important days where people want to get into their accounts, not being able to, big problems. So we'll cover that. 3 more topics. We had a lot of good topics today. Good to see 50 people in here early. I know the viewers start piling in when George gets in here, but thanks for joining me. 3 more topics to talk about. Warren Buffett owns more treasury bills than the Federal Reserve. I'll say that one more time. Warren Buffett, Berkshire Hathaway, owns more treasury bills than the USA's Federal Reserve. I'll tell you how much each owns, and we'll talk about the Warren Buffett, the Oracle of Omaha. Even I think he's 94 years old, just keeps on trucking along. Stocks we don't cover as often on this channel, CVS and Walgreens, continue to struggle. Seems like they can't find a bottom. But one stock we do cover a lot on this channel, Amazon, we've covered how they're making a big push into the healthcare field and how it could be a big opportunity for the expansion of their business. Hello, George. Welcome to the stream. Are you proud of my shirt today? I feel like it's...
Yeah, I know. I was. You didn't even let me do it myself. I was gonna say I liked your shirt.
Yep. It's one of those days. Got to feel good. The market's going down, so I'll try to bring some energy into the stream today. Um,
I didn't know you were joining the shirt competition.
this is like my only one that fancy shirt I have, and it's a summer shirt. So time's ticking. I had to break it out today. Um,
There you go.
but like I was saying, so I'm gonna ask George later on if Amazon should look to acquire either CVS or Walgreens as the stocks have struggled, and maybe there's some attractive bits and pieces of their business that Amazon would be interested in owning. And last but not least, before we turn over to the model portfolio update at the end, we're going to discuss Palantir. They reported earnings, and unlike a lot of the smaller companies or more speculative companies out there in the market right now, they had a positive reaction. We'll talk about their competition, their standing in the AI area of the market, and the future of Palantir. But George, we left off the stream on Monday, and the markets were in a pretty precarious situation with the VIX being so high. We obviously had a huge gap down Monday. There was a lot of fear and anxiety of if things would unfold negatively throughout the week. But since then, we've seen the market kind of recover, sort of giving back some of that today. So I think we just have to update our viewers. How are you feeling about the market right now? Do you feel better or worse than Monday? What's changed in your mind?
Yeah, I was just looking again. It's a real yo-yo situation. Um, it's I just am completely like I'm at a loss in terms of like what the appropriate time to go bullish or bearish is. Like I think we're seeing so much back and forth. I'm staying pretty close to even 50-50 as a result of that. I don't want to like, saying I'm at a loss might scare some people, but like it's more in terms of the direction. Like, anytime the market looks like it's going one direction or another strongly, it's pushing right back the other way. So I think we're definitely looking at something where you have to trade very defensively. That's what I'm doing. I'm even trying to stay like long short sector. Like if I have, one of my latest shorts, I just added kind of a tech short against my tech long SNPS SW what's the other one? SWKS. It's kind of like a semiconductor play in the other direction, but I think that's kind of the attitude everybody has to have. You have to be prepared to have the market go in any direction, any second. And I think that means, you've got to stay pretty even long short, and with your highest conviction picks.
Yeah, and one of those picks that has kind of fallen out of favor in the signals was SMCI, which we brought up on the end of Monday's stream because they had earnings yesterday, which the stock is reacting very negatively to, which the Prospero signals seem to have found out early because on Monday when we brought it up, it didn't look too good, and I believe you dropped all positions, or at least a few of them. But what do you think about SMCI stock now going forward? It was one of the favorites in the signals at one point. What has changed to make it kind of lose that momentum, or can it get it back? And then for the broader AI and chip stocks, you've still been very bullish on NVIDIA and a lot of the AI chip stocks. Do you still feel that way after SMCI?
Yeah, I think Steven, is there a my computer looks like it's going a little slow. Is there a delay for you?
It seems like your picture's slightly slow, but the audio's fine. I don't know if you want to try anything out. It's like moving, but it's kind of just stuttering or lagging slightly.
Yeah, do you think that is that going to be a problem for the shorts?
Um, I could try
I
to
could
just
try
add a
to
lot of B-roll.
I could try to rejoin.
All right, why don't
Um
you do that?
let me do that.
Hopefully,
I think I have these we've had these computer problems in the past. Let me see if I can troubleshoot. I think I know what it tends to be when this happens. Oh,
okay.
we might be on the other side. I just did. Hold on, I'll be right back.
No worries. So I see we have over 300 people that have tuned into the stream already. Let me see some comments. Who was here Monday and who's back? Did anybody catch us covering SMCI live that we helped out? If my memory serves me correctly, Jonathan, one of our usual viewers, was the one who brought up the topic and could have helped some people out because we checked it out in the Prospero app and the net option sentiment was all the way down to 16 or so. And I believe George dropped it from the portfolio live. So let's see some comments. Who was here for that? I'm taking a live look at SMCI now after the drop and after earnings, and net option sentiment is still low at 20, so it's not looking like the market's ready to jump back in. Let's see if the camera, how it's going.
It doesn't. I thought I could just. It looked like the browser might be good, but I might need a full restart of my computer. I mean, it looks to be doing a little better. And
Now the audio sounds worse for me.
now the audio is bad.
Oh, it's back. Okay,
Man, we
it's back to
can't.
being okay.
I might not just. I might need to do a full restart of the computer. Sorry, everyone. Or we can move. Yeah, I'll just be. I'll be right back. You can go through, take basically what's going on with SMCI. I think you should take them through the net option sentiment history. Talk about a little bit about what I said in the chips letter. I'll be right back.
Okay, no problem. Just me and you, chat. Going to talk about SMCI stock. So yeah, so I had just checked in on the net option sentiment post earnings, which is down at 20. And when we were bullish on SMCI, the net option sentiment was regularly in the 80s, 90s, looking like one of the better plays in the market. And a while ago, I think it was even in 2023 now, one of the biggest things that George would say of why SMCI stock was so attractive beyond the Prospero signals was it trading at such a discount to NVIDIA as the forward PE that was expected. And I believe if you guys ever want to check out any of your stocks that you own and the forward PE estimates that they trade at, you can just look up whatever stock it is and then, forward PE, and the one that we use is NASDAQ, which has the best information, we believe. But maybe after SMCI stock, the stock performed so well that forward PE grows. So maybe it outgrew that valuation discount that it had, and now we're seeing the net option sentiment drop. It still has a high level of profitability, being 91. Still has a high level of growth at 71. But it seems like the market has just not had the same love for the AI sector and the high growth and the mega cap tech stocks that it did earlier in this year. Obviously, stocks can't go up in a straight line, so maybe some people have taken profits. The story that I'm going to get into, maybe the smart money is making moves right now. I guess I could give you guys a preview and some of the details from this story that we're going to discuss today. So the JP Morgan statistics that I brought up before, it was that on Monday, in the peak panic of the market, their data shows that retail investors were net sellers of $1 billion in their positions on Monday, while institutions were net buyers for $14 billion on Monday, showing kind of a transfer of money within the market and maybe how some investors were making moves based off emotions, while others were making moves based on I don't know what you want to say, less emotions, data, maybe historical trends. I know from everything that I've been reading and watching and seeing, when the VIX is as high as it was on Monday, you basically can't go wrong over the long term historically buying stocks at that point. because the market's in such a panic that it almost can't become more in a panic. It has no choice but to go up eventually, unless there's a major issue like what took place during the global financial crisis or the COVID crash, which is why um, the VIX being that high on Monday was so interesting because kind of makes you wonder what's happening under the surface that either hasn't come to the markets to the forefront of the markets and hasn't exposed itself yet, or if there's nothing like that underneath the market surface, why was the VIX that high to begin with? So I think there's a lot of questions and a lot still to be answered from the Black Monday, so to speak, that we saw in the markets this past week. Anybody want to check in on your favorite stocks in Prospero? For everybody tuning in now and you're seeing just me, George will be right back. We're having some problems with the camera today, but looks like actually we might have gotten it fixed because I see George back in here now.
I think things are looking better. No,
Yeah,
it's
yeah, it's not
hey,
quite perfect.
it's like, some days it's just like I think I have to like reset my internet. That's the only other thing. But we might just move over to the thing to where the um model portfolio gets done. That might be our best our best bet.
The Prospero Laboratory, as I like to call
Yeah.
it.
But we can talk about it. I mean, is this working at all? Like,
Yeah, I can hear you, and if you just want to cover this topic right now, that's all good. I kind of set it up with the chat, all the information about SMCI already. So if you just want to kind of share however you're feeling about it post earnings, and yeah,
so I mean, I think I think that SSI is a tough one because you did see it go up like almost 14% after the market closed, or 15% after the market closed yesterday. It really shot up. It might have even gone higher than that. I wasn't watching it all that closely. But then it obviously went down by about that much. And basically people were initially excited about the results and they guided up, but in terms of revenues. But people are worried about their margins and people are kind of worried about competition in the space. And I think that in a better market with less, kind of a less worried market, I think it would have fared better. But we are seeing pretty harsh reactions to everything, and I mean, SMCI's earnings weren't the best, but they weren't really bad either. And I think what we really just saw with that was a tentative market. Obviously, the revenue increases are in line with the thesis we've been talking about, which is that we think chip orders are going to keep going up and being guided up. So, it's one of those instances where we didn't hold it um, through the earnings because we thought it was a bit risky. But as we always kind of say, it's good to make sure your thesis is intact. And our thesis around chips continuing to do well did stay intact.
So since it's down, I just looked at the chat when you were gone, like 19% today. Are you going to be looking to add it back in if the signals improve, or is it attractive based off the discount from the performance today?
I mean, net option sentiment looks very low. So I don't like when I last looked, it was at 21. So I would consider it if I saw that going back up, but not otherwise.
So I don't know if you want to do a switch over now. I think this one more point kind of plays into this topic. Maybe we just want to talk about this and then move over.
Okay.
Yeah. So J.P. Morgan released statistics about how during the peak panic on Monday, retail investors were net sellers of the market by $1 billion, while institutions were buyers of the market for 14 billion. I think that kind of maybe shows the difference between, I don't know how you'd want to call it politely, smart money and dumb money or whatever you'd want to say, but trading based off emotion. And if you could speak to that and maybe talk about how to remove your emotions from a situation like that when we saw the VIX at 68 and the market huge gap down uh, after the weekend.
That's really, it's really tough. Like, I ultimately, I ultimately don't think that retail is kind of, built for that kind of volatility. I think that's why a lot of people lean towards like sort of a buy and hold strategy. Um, but that's kind of what, we have Prospero to have people, have, you know, find more confidence in the names that are remaining, especially in an option sentiment. Um, but yeah, I mean, I think, that's why we made our article, our newsletter on Sunday about volatility, because we were expecting a volatile market, and it's important to manage your expectations. And if you're expecting a volatile market, it's much easier to look for opportunities than if you're just expecting, if you're caught off guard and you panic sell.
Yes, so I want to see some comments in our chat. Do you a buyer or a seller on Monday? I'm thinking our Prospero viewers were probably buyers. They bought the dip. But George, do you want to do the switch over and we'll see you in the other
I'll do the
setup?
switch. Yeah.
All right. So we'll catch George on the other side. Uh, Viewers, don't change your channels because we have some interesting topics still to come. Obviously, like always, if you have topics you want to hear covered on today's stream, feel free to comment them. We're happy to address any of your topics, concerns, worries, stocks, whatever in the market. Um, and then at the end of today's stream, like usual, we'll do the model portfolio update, which after the sell-off throughout the day we've seen today, actually since the stream started, we've kind of seen the market come back a little bit. QQQ is down 1/3%. SPY is down 1/4%. So is the Dow. IWM Russell 2000 still lagging, down 0.75%. Just cannot catch a footing. But let's take a look at the SPY and the QQQ net option sentiment live. That's a good question, SaaSbox. I'll have George answer that. It feels to me also like I don't know if your question is hinting at this, but that is the true fear of the market, that the U.S. economy is really headed to a recession, and the market is fearful of that, and the Fed is not lowered rates quick enough. So um, I'll definitely ask George that. What's the likelihood that we're on the precipice of a recession? I think if I were to answer that, I would say probably fairly likely, because if you look at historical um, trends and data and what's happened in the market, usually there's some troubles after the Fed's first rate cut. So I guess we'll have to see, but I'll have George answer that in more detail. Comment what you think. I'm curious what you think on that topic as well. Do you think the market is going lower, or only time will tell? Or are we close to the bottom? That's a good question, Chris. I think what George will say is that you just have to lean on the Prospero signals. The net option sentiment for the QQQ and the SPY still both in bearish levels. So I think as long as you see those ratings so low, I don't think you can be confident that the market has hit a bottom. But I'll let George answer your question in detail. QQQ net option sentiment is at 18. I don't know if I said that already. The SPY is at 41. So we're seeing the SPY kind of hang on stronger than the QQQ. The SPY also hit a low of 0, and it's kind of come back. So hopefully that's a sign of things to come, that we're going to see some strength. We got some questions for you, George, while you were gone. What's the likelihood that we're on the precipice of a recession? And also, Do you think the market is going lower, or only time will tell?
Um, I'll just. I mean, we could be on the precipice of a recession. I mean, often know, when you see like rate cut patterns like this, or basically on the verge of a rate cut around the first one, that is traditionally a time when the economy sinks. So I mean, we're kind of lining up for that. I do think, regardless of who wins the election, there could be some like policies that excite the investor community. Both the Democrats and the Republicans tend to do a lot of work to um, reach out to Wall Street. So I think that um, that definitely directionally there are a lot of signs of that a recession could be on the way. But I do think there's a lot of things that could potentially take us into more of the soft landing scenario that Powell's talked about for a long time. As he says, you have to look at the data, and there's things that kind of has to happen. Do I think the market's going lower? Um, Probably. Yeah, like probably lower than this, but it might shoot up after that. We're expecting a volatile market, and especially to your point, when you're seeing that option sentiment, on QQQ and SPY at these, kind of lower levels. Um, that's um, that's definitely something that makes me nervous, makes me think that like even if it's volatile, it could be volatile, up down, but kind of in just a generally bearish direction. That's where I'm leaning right now. But it's so hard to tell, so many different catalysts. Again, earnings have been good. I do think you know, going back to SMCI, in terms of the revenue story, their revenue story was good. So we are still seeing the sales, especially in like the biggest market driver of this like AI chips thing. Um, so it's hard to say, but I would be definitely defensive, and I'm definitely also leaning more bearish than I have all year.
Follow up to that, we got another question from Chris. Would you suggest raising your cash position as long as an option sentiment is bearish and wait for that to increase before moving back into stocks?
Yeah, but as you're seeing, it's pretty volatile, right? So like we saw it shoot up to, we saw SPY shoot up to 52, and now shoot up to 52 today. QQQ kind of at 44 in here open. So yeah, it's gonna be a wild ride. It might be pretty bumpy. But if you don't feel comfortable going long short, cash is definitely not a bad idea.
So I think Warren Buffett might be thinking along the lines of Chris, because it might not be cash, but he is being very defensive in what he's done. So Warren Buffett now owns more U.S. Treasury bills than the Federal Reserve. Berkshire has $234 billion worth, and the Fed has 195 billion. Um, as we covered on Monday, him selling Apple stock, a lot of his moves seem to be signaling that he's kind of very defensive. Maybe I feel like more than usual. Do you read in anything to that? Is the Oracle of Omaha predicting some pain for the stock market with the moves he's making?
Yeah, that's a great stat that it's more than the Federal Reserve. I mean, yeah, selling Apple and buying treasuries is, I think, pretty much as bearish as you're going to see Warren Buffett. I mean, we might see him get a little more bearish. Like it's as bearish as I've seen him in my memory. And I think that, especially that huge, kind of taking advantage of, interest rates that might be falling, grabbing those T bills. Um, I think he's basically like, not only is he saying that he's worried, I think he's saying he's pretty sure there's some bad stuff coming.
I mean, this story is perfectly for that meme. I'm the captain now from I forget what movie that's from, but if the chat knows it, Warren Buffett's doing that to the
It's
Fed.
um
It's that movie with Tom Hanks, right?
yeah, yeah,
The
yeah,
sailing one.
yeah.
The
I
chat will let us know. So next story, Disney, which we've kind of criticized their spending so much money on building out Disney Plus, turned the first profit ever in that segment, which, they reported earnings this morning. You'd think the stock would be up based off that news because it seemed like investors in the market cared about the streaming numbers. But the stock is down based off the guidance and results they've had from theme parks. And I know Airbnb had very negative guidance, and the stock dropped recently. Seems like the travel trade and post pandemic boom of experience spending from consumers is dying down. Another worrying sign for the economy, I would think. How do you feel about those trends we're seeing?
Yeah, I mean, I think this is gonna be the earnings season of guidance mattering, more than anything else. And I think we've kind of seen that in more than a few examples at this point. Guidance always matters, but I think with all the uncertainty in the market, if you give guidance that gives people any reasons to be worried, um, they'll probably find a reason to be worried. Um, so yeah, I think that in terms of the Airbnb, Disney, maybe like travel trade, we saw booking.com or holdings post some concerning results. And yeah, I do absolutely think there might have been, kind of some big, pent up travel that came out after the pandemic. And now we're seeing like with consumer debt goes up, up, up. I mean, it keeps going up. I think some of those people are starting to say maybe it's time to tighten up a little bit, especially on the travel. Like we weren't seeing that. But sometimes these things can be connected. And sometimes when everybody's saying like, oh, the economy's great, everything, people don't worry and they keep spending. But now as more and more people are kind of talking about economic concerns, what we might be seeing is some people saying, you know, thinking about travel plans differently, tightening up a little bit. So yeah, I think that's um it's always been there. There's a bull too. I think I have to move out of the way for you to see the bull. There it is. It's smaller. Maybe I don't. Maybe you just noticed it on a bare day. Um, but yeah, I definitely think that we're seeing uh, we're going to see a lot more worry, and that's one of the reasons we've been attacking consumer discretionary stocks on the short side a lot this year. We kind of renewed that focus. We'll probably continue to. I definitely think we've talked about it all year. When the market was booming, we were saying like, well, it's still kind of here. We still have this macro concern of consumer spending, but we're still bullish now. That's looming larger as you see, concerning jobs numbers, concerning guidance out of, these companies that, I think travel is kind of a very interesting marker of how confident consumers are. So, yeah, I think that's definitely something to be taken seriously.
And we got this question from Sebastian, who I feel like from the question might be a newer viewer or Prospero user. He's asking, we can use this tool. I think he's referring to net option sentiment to get a clue when a crush stock might be starting to bounce back. For example, Intel.
Um, I mean, I'm seeing some resilience in Intel net option sentiment, but I did see it drop at noon today. It's at 69. I would say looking at these charts, if you see, I mean, downside breakout is on a big upwards trend, but nonetheless, I would say if you see two readings in a row, like as in like a morning, a midday, like on the time series, if you see two that are above 80, I would call that a buy signal on INTC.
Yes, some beaten down AI chip names to look for in the Prospero signals. Next story to cover. With all the volatility in the markets, some of the brokerages have had some issues functioning as business as usual. So Robinhood 24-hour trading was completely down 2 days ago. Last night, there was only a few ETFs like SPY and QQQ and several others that were available. I saw people posting about how on Monday they couldn't get into their Schwab accounts. Um, if volatility remains high, especially on these important days, are these brokerages, could this be expected, or why is this happening? I feel like those are the most important days. They should be up and like running.
Well, that was the funny thing about Robinhood 24-hour trading is that, and I said this at the time, it's like you do realize they are only taking those orders and they're only doing it because they know that they can turn it around and and sell it for a profit in the morning, or sell forward contracts with, Citadel or whoever. So, anytime you're participating in a market that's not a live market, you're basically giving them a chance to do that. And this just reinforces it even more. It's not even a real market. They just shut it down whenever, basically things are too volatile or risky and they don't have their forward orders the way they want them to. That's probably what happened. Basically, nobody wanted to take forward bets on the pricing. So they couldn't actually offer pricing because Robinhood isn't buying it themselves. They're just putting your transaction in the 24-hour market in front of an institution and asking them if they want to buy it. And if there's too much volatility, they don't want to buy it. That's why you should never use Robinhood. You shouldn't give them your business. Their customers are Citadel. Their whole business in figuring out new ways to use you and your data to get more money out of institutions. And it doesn't surprise me that, oh, they're offering this 24-hour market. And then the second, it doesn't do well for them, they shut it down. Can you imagine if you're in the 24-hour market, you just made a transaction, you are trying to get out of it, and you can't, and basically the rest of the market's selling off, but who might have just bought a position going the wrong way because you thought it was a little dip into a bigger dip, you now can't get out yourself. That's the tragedy of people using Robinhood, and I really wish people wouldn't do it. They're not on your side.
Yep, it's a common theme whenever we talk about Robinhood. It seems like something's always going haywire with them and their alignment with retail investors. But spinning to our next story, CVS and Walgreens, two companies that just have not been able to have well-performing stocks in the market for some time now. We've covered a lot about Amazon's push into healthcare and how it's a major opportunity for them, possibly a big money-making sector that they are really making an effort to get their grips on. Do you think Amazon would be interested in acquiring CVS or Walgreens, with the companies kind of not being able to perform, even as we've been in a bull market? Um, and I think the one thing that maybe would be very attractive to Amazon is the clients of the pharmacies of CVS and Walgreens getting those accounts in Amazon. But how do you feel about it?
I think the customer list is interesting, but I don't see them doing it. Like, the big reason I don't see them doing it is because um like the lease liability, like Amazon is anti brick and mortar, and there's so many lease liabilities in these companies. Like, I just don't see Amazon taking on those liabilities, buying those footprints. That's kind of like the antithesis of everything that Amazon does. But I think, you know I mean, it also in terms of like the list, right? What do you think? Like, what percentage of people are in the CVS or Walgreens database that aren't Amazon customers already? I doubt it's that big, right? And maybe like, maybe there's, what medications, but like I don't think you can transfer ownership of people's prescription records either. I don't know that. That would be an interesting question. But at the very least, it's a little like I mean, maybe in an acquisition if you're just like taking over the records and you're honoring everything, but like I don't think you could say sell that list. I mean, it gets a lot more complicated. Um, but no, I think Amazon's got a plan to roll out their pharmaceuticals business themselves, and they don't need any help.
That's a great point about the overlap of the customers. The number that came to my head is maybe 20% of people aren't Amazon customers that are CVS. What would you, if you had to throw a number out, what would you say?
I don't know. Like I was struggling. Like who are those 20% of people that that got like maybe they're just like old people, which could be good like medicine customers. But like yeah, I think so many people like I don't think Amazon's problem is user acquisition at this point, right? If they roll out a good product, if they roll out a good pharmaceutical product, right, word of mouth will spread, and they'll get to those old people that are in CVS's database and not in Amazon's. Like somebody's kids will tell them, like, "Hey, like, are you still walking 10 blocks to CVS? Like, why don't you just order it on Amazon? It's probably cheaper." Like that's how it's gonna go down. I don't think they need to pay a bunch of money for that.
So it sounds like CVS and Walgreens are doomed because Amazon doesn't even need them, and they're going to build a better product and service. So, going to be interesting to watch those companies coming
Yeah,
years.
I mean, really the thing is like when you think about brick and mortar, I think the only thing that I see working brick and mortar longer term are either, you know, higher level service items. If you go into like a farm, like, we'll use a pharmacy example, like you're kind of back to the mom and pop, but except they have a lot of products and a lot of help, right? Good customer service. That's the one thing that I think might be prioritized more, might survive. And then just like goods that are more expensive that you'd like to try first and create like a good experience around. Like everything else, I think is likely to be eaten by Amazon.
Hmm. So we have one more topic to cover before the model portfolio. Um, Earnings season is winding down, but Palantir reported had very good earnings. I was going to bring them up on the stream today and say they're defying the small cap odds, and then I looked up their market cap and I was shocked at how big they are, 60 billion. I don't know if you could really consider that a small cap company. But I know there are a lot of Palantir bulls out there on social media and across the different stock market threads. How do you feel about them? I feel like they're kind of in their own niche almost of AI companies. Maybe they have less competition than a lot of the other AI businesses. But how do you feel about Palantir?
So the way I feel about them is that for now, you're right. They kind of like in their like kind of like custom build out zone, like they're kind of unrivaled. Um, but I think their biggest competition again is going to be the cloud providers. I think you're definitely looking at, Amazon, Microsoft, like Google isn't as good as this as those other companies that are going to start doing that same type of like basically consulting work is a lot of what they do. They do consulting mixed with data science, mixed with AI, some like a very successful engineer I once met with said they just basically all Palantir does is do external joins. And external joins are basically um, lining up data sets in large organizations that don't currently line up. Or, an example of an external join that Palantir did is when they caught that like killer that like stabbed someone in like Pennsylvania
and drove all the way back to like Iowa. I may or may not Idaho. I may or may not have those states wrong. Basically, like the system that caught him was one that was stitching together license plate trackers across state lines. They basically had to join those data sets. And that's something that Palantir helped with. But, for now, they're the only ones with the technology to properly leverage, that kind of like custom database work, essentially. But I do think in the not too distant future, they're going to be facing some heavy competition from Microsoft and Amazon and Google.
Seems like everybody's facing competition from those companies. It's funny how many different industries they touch. Comment from SaucePot, SaaSbox. Don't they also have defense contracts? Yeah, I believe so.
That's what I'm talking about. External joins, like a lot of those same types of things, like joining data sets, analyzing those data sets. Once you join the data sets, it's pretty easy to analyze them. But yeah, it's a lot of the same type of work. Whether you're talking about Fortune 500 or defense, a lot of analyzing data is getting it all in formats that speak to each other before you could start analyzing it. The actual analysis, not that hard. Well, not that it's becoming more and more uniform. There's more and more like kind of like best practices. Algorithms are doing a lot of the heavy lifting, but it doesn't necessarily take any kind of problem solving talent. A lot of the times the problem solving is the setting up of the system, how to join the data sets. Sometimes joining the data sets involves kind of like, fixing some columns to be on some schedules of other ones. There's a lot to it. I've done that work a lot, actually, personally. At my last job, I did AI as a service. So I know a lot about it if there's more direct questions, but I don't think I need to go super far down that rabbit hole because that might not interest everybody.
And it is time for the model portfolio update, in which I will get a live look for us on the net option sentiment for QQQ and the SPY. We saw kind of the market selling off throughout the day. It's caught its footing, but the QQQ is down 0.5%. SPY is down 1/3%. So let's look at the QQQ net option sentiment. Is at 15 currently, so not that great. And the SPY is at 43. So we're seeing the SPY kind of separate itself from the QQQ again.
Yeah, we've seen the story. Oops. I accidentally clicked. All right.
So it looks like consumer defensive might be an area to target. As long. We already increased our exposure. On real estate and utilities, so we'll leave that alone for now.
we have here?
No big patterns here other than the fact that small caps seem to be extending their decline. Same old story. But we have a lot of good exposure here to already, so 2 already, so we only increase a bit.
I can't believe it. Microsoft is just. Whoa. Wolf, really? Okay. We are going to look for some consumer defensive longs. Oh. Oh gosh. Fresh bat. You don't look happy yet. Ooh, is it time for CELH again? No, definitely not. Maybe we'll take a flyer on CELH. PFGC. We're going to take a flyer on CELH. Nothing else looks good. And you know what? We'll take a quick stop. Just check real estate and utilities. See if there's anything interesting here. It's very wow. PNM. What the hell's going on with that? 100 net option center. The hell is PNM?
It's a weird chart in Prospero too.
This is too weird of a stock. I'm not doing it. No, nothing looking very good. CSGB, last one to check. Nope. Everybody's looking very bad. All right, let's see anything. I'm going to do greater than 100 million. Some of these, sometimes we get these very. I might look at save. Adding it right now. Yeah, that's it. I don't know if there's like some news event right now, but it's looking horrible all of a sudden. Wait until tomorrow. That could easily swing back on the investment side. I can keep my eye on it. Okay. Damn, this really went back up. It was like at nothing before. All right, we're gonna get DM, and then
Looks like we may be going back and forth every day. We are staying pretty neutral, long, short as a result, and as the title says, never getting too comfortable.
all right, there we go. All right, done. All right, we're out of here.
Yep. As always, thanks everybody for tuning in. See everybody back here Monday. Let's hope this weekend is not as interesting as last one was and Monday's a little better opening. But we'll see everybody then. Thanks for tuning in.